Yes, a very good morning to all of you. Right, so we have already completed with the module 1 and the module 2. Right, so we've completed with the entire theory part of our discussion, wherein yesterday we also completed with the chapter number 12, which was regarding the digital auditing and assurance, wherein we talked about the next generation audit. What are the emerging technologies over there, like drone technology, augmented reality, virtual reality, and the metaverse, and how the metaverse is going to be affecting the financial domain. And then we also discussed regarding the emerging technologies in audit, wherein we talked about the data analytics, right? And in data analytics, we talked about the Alteryx, right? Then after that, the audit command language, the Power BI, and the Caseware. And then the last part of our discussion was regarding the automated tools in audit, wherein we talked about the Internet of Things, the artificial intelligence, the blockchain technology. Under the blockchain, we also had a discussion regarding the non-fungible token. And then last one was regarding the robotic process automation. For each of these headings, we had to discuss what is the meaning, what are the audit implications, and also what are the common risks associated. Right. So over a period of time, this is the discussion in our batch which we've completed so far. Right. So we started with lecture number 1A, and then yesterday it was the last one, lecture 38 in the theory part. And then we first spent some amount of time, rather good amount of time over there in the study of the ethics, that is the professional ethics and the liabilities of the auditor, right? So if we try to look into the number of hours as such for the professional ethics and the liabilities of the auditor, right? Just give me a moment. Okay. Right, so if we try to look into the number of hours of our discussion for the professional ethics, right, it's almost been like the 32 hours of the discussion over there, right, for the chapter of the professional ethics and the liabilities of the auditor. Right, so we started with the introduction, and then after that the ethics, liabilities of auditor, then delved into the world of the auditing standards, right? So starting right from SE 200 to 500, 315, right, then 330, 450, the three best friends. Then a little bit of discussion regarding the risk assessment part. So this chapter 3 has two parts: risk assessment, internal control. Internal control part we covered later, right? And then after that the 210, then the very interesting audit report series, right? So the entire 700 series, then section 143, then the Caro 2020, the 21 clauses of the Caro 2020, then the entire question bank of the Caro, and so, right? Then the SQC 1, 200 series, 300, 400, 500, right? So that was our entire journey into the auditing standards and the engagement and quality control standards, right? So that is up to the class number 26B over there, right? Then after that we completed with the internal control part, right? So risk assessment already done, then we did the internal control, then banged into chapter number 16, which was regarding the internal audit. And then you might remember we completed with 16, 17 and 18, right? So 16 was internal audit, 17 was due diligence, investigation, forensic accounting, and then 18 regarding the SDG and the ESG assurance, which is also known as the emerging areas, right? Then we started our journey from the 15, 14, 13, 12, right? So we completed with PSUs, then NBFC, that was 14B, then 14A, which is regarding the bank audit, then 13, which is regarding the group audit, and then last one which we discussed was regarding the DA, the digital auditing and the assurance, right? So yeah, probably for these 4 lectures I'm yet to put the time over there, but you see more or less all our lectures have been 2 hours plus something, right? So I can add like say 8 hours over there, right? So yeah, probably some number has come in again over there, right? So otherwise it is the 146 hours and plus these 8 hours, right? So somewhere around the, right, this total, right, some particular change required in the total, but yeah, it is yes somewhere coming to around the 146 hours over there, right? The 146 hours and plus the 8 hours, so around 154 hours of the class. Okay, right? So that's the discussion for the theory part. Yeah, so I will upload this particular sheet on the Google Drive, so that I'll put the PDF of this once I update it, right? So that you can have it for your ready reference, like if you want to look into a particular chapter or a particular standard, you know where that discussion is there in the videos over there. Okay, right? So now we need to go to the, so these 2 modules have already been dealt with, Right, so I hope the enough amount of markings are there as an audit evidence for you that you know that yes ma'am, these have been already studied. Okay, right, so now we need to deal with this particular third module over there. It's like asking कि मेरा number कब आएगा? So we say हाँ, आज तुम्हारा number है ना, like today is your turn now, today and tomorrow. Right, so in this particular book you see that there are the 1300 MCQs over there, right, and all the MCQs, right, from the study material to previous exam, latest exam, RTP, MTP, integrated case studies, then an institute study material. After each chapter also they've given the MCQs, right, so those concept-wise case studies plus the standard-wise MCQs and the chapter-wise, like bank audit MCQ, NBFC MCQ, PSU audit and so. Okay, right, so can we get this topic-wise lecture sheet? Yeah, so that I have already said that I will be sharing this particular sheet with all of you. Right, so now today and tomorrow is going to be a roller coaster ride into our discussion on the MCQ. Right, you will realize that how as we start looking into the study for the MCQ, how your skill set and how your guessing skills and how your particular analytical skills and application of concept skills starts developing over there. Right, so we have this entire book, so I hope you all have this book in hand, yes, in front of you now. And again, a very important rule to be followed while studying from this MCQ book, that please don't be tempted to look into the answer. The answer is permanently there, right? So this is one particular error that they've done, right? It is the SA 600 series MCQ in the chapter number 6, right? And then after that up to chapter number 11, so you have all the MCQs on the standards, and then 12 to 19, right? And then chapter 1 and 2, it is the integrated case studies, which is itself running into 62 pages, right? So some 37 integrated case studies given over there. And then after that also the concept-wise case studies. And then you see the SQC 1, 200, 300 series and so. And then after that these others, right? So we have around 1300 plus MCQs in this particular book. We'll try to cover the maximum possible, at least to give us an idea regarding how do we deal with this particular MCQ part also. And so what we will do, we'll do little bit of the integrated, little bit of the, the case studies, the concept-wise case studies also, then few MCQs from the standards also, and few from the remaining part also. Right, so rather than doing all the 37 of the integrated together, that might be quite heavy duty, right? So we just divide it into bits and parts. Okay, right, so all of you all set, lot of storytelling today, lot of right, so it's just basically you need to sit back and think of all the concepts that you've studied so far. Yeah, one important rule when you're studying from this particular book, right, what has been done, the answers have been written right over there on the right hand side, right? So when you are studying on your own, what I expect that you keep a blank piece of paper, or some particular bookmark or something with you, wherein you hide these particular answers when you are trying to solve the MCQs on your own, like you try to hide out these particular answers, right? So like this, say I've hidden those answers over here, then you think on your own what could be the answer, right? And then after that you remove that bookmark which you've kept over there, and then you tally, okay, oh, this is what I thought and this is the answer over here. This is the only correct way of studying from this book. If you see, oh, this is the question and this is the answer, then you're just convincing your mind. You're not trying to give an opportunity to your mind to see what your mind already knows or what is your thinking, right? If you come say what you thought was A and the actual answer is also A, nothing like it, right? Because then you know that you have the right thought over there. But in case if you thought of the answer as B and the actual answer came as A, then you get a window over there to think of, okay, oh, why it should be A and why it is not B, what I thought of, what is the correct thing over there, right? So that learning happens over there. And so if you look at the answer, then that learning opportunity you miss out. And if you miss out on that learning opportunity, then again tackling the MCQs in the exam would become difficult. Right? So rather, obviously you feel happy when you give a good answer. But even galat answer aa gaya na, be like damn happy. And be like, thank God I realized it. Otherwise, in the exam, I would have goofed it up this way. So then you say, oh, I never thought, I was thinking on this line, and this would have been the correct line of thinking. Right? So because in the beginning, I used to keep at the end of every chapter, I used to make an answer, the answer box over there, and then say 1, the answer is A, and 2, the answer is B. And then after that, you had to on one side look at the question and then go towards the end of the chapter and see the answers over there. And then again, if I have to change the sequence, again the entire answer box used to get changed, and then that used to lead to more error rate in the book. Right? So that is why I thought that CA final students have the maturity. Like once I tell them that this is the approach which you need to follow for studying from this particular book, I'm quite sure that they will understand the same. Okay, right. So anyways, let's continue. Let's begin with our discussion. So continue with our studies for CA final and now begin with our discussion regarding the MCQs. Okay, right. So question number 1. Sun Chemicals Limited, a prominent player in India's industrial landscape, has been etching its mark since inception in 2008, headquartered in the bustling city of Pune, Maharashtra. Listed on the Bombay Stock Exchange and the National Stock Exchange of India, the company has steadily grown into a multifaceted entity catering to diverse industrial needs. Okay, Sun Chemical Limited core strength lies in its robust manufacturing capability. Spread across multiple state-of-the-art facilities, the company provides a wide range of industrial chemical, including the specialty chemicals, the performance chemicals, and the basic chemical. These products find application in various sectors from pharmaceuticals and textiles to paints and coatings, construction and agriculture. RKM and Company, a chartered accountancy firm, was appointed as to conduct the statutory audit for 33-34 for the company. Rahul Dubey was the engagement partner for the said assignment. In the organization structure, Mr. Rahul noticed that TCWG in the company are also involved in managing the entity. During the ongoing engagement of the audit at the end of the third quarter, during which tenure already 2 limited review reports were issued by RKM and Company, the management of the company imposed a limitation on the scope of audit that Mr. Rahul considered likely to result in the need to express a qualified opinion or a disclaimer of opinion, on the financial statements. And we say disclaimer, khali haath aaye the hum, khali haath jayenge. Okay, right? So, or to disclaim an opinion on financial statements, and accordingly he requested that management remove such limitation, but the management refused to remove the said limitation. After following the due procedure applicable in these circumstances, finally Rahul with his engagement team derived on a conclusion that the possible effect on the financial statements of the undetected misstatement could be material and pervasive, so that a qualification of opinion would be inadequate to communicate the gravity of the situation, and accordingly he proposed to withdraw from the engagement after consulting with the senior partners of the firm on 15th November 2033. In its resignation letter, the firm mentioned professional preoccupation as the reason for the resignation. Okay, what was the responsibility of Rahul when the management refused to remove the said limitation? Right, so you request the management to remove the limitation and they refuse to remove the limitation. So determine whether it is possible to perform alternative procedure, to communicate the matter to TCWG and determine whether it is possible to perform alternative procedure. But here they say TCWG were also involved in managing the entity. To determine whether it is possible to perform additional procedures to obtain the SAAE, to request for written representation from the management for the matters on which limitation on scope is imposed, and also communicate the matters to TCWG. So you say you give it to me in writing, you're not giving me evidence for these matters. No. Additional procedures? No. Communicate with TCWG and then check whether alternative procedures are possible? No. What do we say? What is the style of the auditor? Directly ask, or by hook or by crook. And so by hook is the main audit procedure. Your main audit procedure not possible, then auditor what to do? Alternative audit procedure. Alternative audit procedure also not possible, go to SA 705. Right? So by hook or by crook. So what is the crook? Determine whether it is possible to perform the alternative procedures to obtain the sufficient appropriate audit evidence. Okay. What was the responsibility of RKM and Company with respect to the issue of the limited review report report at the time of resignation. Right, so limited review report for the third quarter was required to be issued. No further limited review report was required to be issued, as already it was issued for the second quarter at the time of resignation. Limited review report of third quarter was required to be issued, and consequently after its issue, audit report for the full year is also required to be issued, and limited review report for third quarter was required to be issued subject to the terms of the engagement. Right, so now what do you see over here? When has the auditor resigned? Auditor has resigned on the 15th of November, right? So 15th of November 2033, right? So now what was the quarter which got over just before that? 30th September, right? So entire month of the October, and then after that the 15 days of the November, right? So when we studied our SA 700 and our audit report series over there, we studied one provision of SEBI LODR, right, which says that auditor, if you resign within 45 days from the end of the quarter, or if you resign after 45 days from the end of the quarter, then before such resignation, if you resign within 45 days, then before you resign you have to give the report for such quarter. If you resign after 45 days, then you have to give the limited review report or the audit report for such quarter as well as the next quarter. And irrespective of the above, if auditor you have done the audit for the first 3 quarters, then before resigning it says you have to do the audit report or the review report for the last quarter as well as the audit report for the full financial year, right? So here has the auditor done the audit at the end of the third quarter, right, where the tenure for already 2 limited review reports was issued. Right, so now what does it say? In this case, auditor, you have to issue the limited review report for the third quarter, right? That is December quarter, because he is resigned on the 15th of November. And what does it say? Consequently, after its issue, also issue the audit report for the full year is also required to be issued. Right, so what does it say? Auditor, you cannot just take up your laptop and put it in the laptop bag and start walking over there. No, there is a SEBI LODR provision which is required to be followed. Okay, yes, whether in the given circumstances withdrawal from engagement was mandatory, and if so, what is the responsibility of the auditor with respect to such withdrawal? Right, so what does it say? In the given circumstances, withdrawal from the engagement was not mandatory, and in case of withdrawal, the auditor was required to withdraw from the audit where practical and possible under applicable law or regulation. In the circumstances, withdrawal from engagement was mandatory. So first one it says not mandatory, then it says mandatory. And in the case of withdrawal, as the withdrawal from the audit before the issue of the audit report was not practicable or possible, he was required to give a disclaimer of opinion because it was material and pervasive. In the given circumstances, withdrawal from engagement was mandatory, and in case of withdrawal, the auditor was required to withdraw from the audit where practicable and possible under the applicable law regulation. So first point says not mandatory, this point says mandatory, rest of the points are same. And in the given circumstances, withdrawal from the engagement was again not mandatory, and in case of withdrawal, as the withdrawal from the audit before issuing the audit report was not practicable, he was required to give a disclaimer of opinion. Right, so now not mandatory, mandatory over there, and then says required to withdraw as practical possible under the applicable law regulation. No, right, and then it says give a disclaimer of opinion, not practicable possible. Right, so that also will not be the correct option. So in the given circumstances, withdrawal from the engagement was mandatory, and in case of withdrawal, as the withdrawal from the audit before issuing of the audit report was not possible, then what to do? Give a disclaimer of opinion on the financial statements. Okay, then assuming Sun Chemicals Limited to be an unlisted company, whether the reason for resignation given by RKM and company was proper. What they say, professional preoccupation is the reason for their resignation. And what they've said, professional preoccupation as the reason for the resignation. Right, so whether this reasoning is proper, right? No, the auditor should have clearly mentioned the reasons for resignation in the resignation letter. Yes, as the requirement for clear mention of reasons is not applicable to unlisted company. Yes, in the given case, the reason was for resignation due to limitation imposed by the management and refusal to provide reasons for the same. And accordingly, though being an unlisted company, it was totally upon the discretion of the auditor to provide clear reasons or not for resignation. No, the resignation should have been a little lengthier. Oh my God, what a generic term. And further, the exact reason must be provided to the new auditor to be appointed by company. So where they are reaching to new auditor over there. So keep it same. No, the auditor should have clearly mentioned the reason for the resignation in the resignation letter issued to the company. Okay, right. Next one, question number 5. Assuming that the auditor proposed to resign on 14th November, so instead of 15th November, before issue of the LR for the second quarter, then what was the responsibility of RK and company with respect to the withdrawal from the engagement and the issue of the limited review report at the time of resignation? Right, the auditor shall communicate with TCWG regarding the misstatements identified during the audit, and that would give rise to a modification of opinion in the limited review report for the second and third quarter. The auditor shall communicate with TCWG regarding the misstatements that have been identified during the audit, which would require a modification to the opinion for the limited review report of the second quarter. So first one says second and third, second one only says the second quarter. The auditor shall communicate with management TCWG the matters regarding misstatements identified during the audit that would give rise to a modification of the opinion and the limited review report was not required. The auditor shall communicate with TCWG the possible effect on the financial statements of the undetected misstatements, if any, could be both material and pervasive, and so that a qualification of opinion would be inadequate to communicate the gravity of the situation, and the limited review report for second quarter was required to be issued. Okay, it is material and pervasive, so a qualification would be, inadequate. No, so what does it say? 14th November. Then before resignation, if it's within 45 days, then before resignation, he has to give the limited review or the audit report for such quarter. Right, so such quarter, that is the point number B. Right, so that's a different line of learning which you get from that MCQ over there. Right, so just that one concept of SEBI LODR, which is there in our audit report chapter. Okay, what if the auditor resigns? Right, within 45 days from end of quarter, after 45 days from end of quarter, or after he's done the audit or the review for the first 3 quarters. Right, so that's mainly an integrated case study over there regarding the resignation of the auditor. Okay, right, so one down, so 36 more to go. Great job. Okay, integrated case study. Sit straight. MN and Associate, a firm of chartered accountants having CAM and CAN as partners, is based at Mumbai. MN and Associates are appointed to conduct statutory audit of Zinc Limited. Zinc Limited is required to appoint an internal auditor as per the statutory provisions given under the Companies Act, and a 25 doubling PBT, and a listed company, unlisted public company, and also the private company B or T, borrowings or turnover. Right, appointed CAIA as its internal auditor. MN and Associates, right, asked Mr. IA to provide direct assistance to him regarding evaluating significant accounting estimates by the management and assessing the RMM. And so direct assistance, you can't take direct assistance for matters which involve the significant judgment, and making accounting estimates and assessing the RMM. It says these are the areas which involve the significant judgment. He also seeks his direct assistance in assembling the information necessary to resolve exception in confirmation responses with respect to external confirmation requests and evaluating the results of the external confirmation procedure. Right, so assembly of information, like that mechanical work, yes, we can take direct assistance from internal auditor. Right, so this is a question regarding the SA 610, the direct assistance from the internal auditor. Right, so M accepted his appointment as a tax auditor of a firm under section 44AB of the Income Tax Act and commenced the tax audit within 2 days of his appointment, since the client was in a hurry to file the return of income before the due date. After commencing the audit, X realized his mistake of accepting his tax audit without sending any communication to the previous auditor, NOC 811. And so this is integrated case study. Now, first part direct assistance, second part NOC 811. Accepts appointment as an auditor previously held by another chartered accountant without first communicating with him in writing. In order to rectify his mistake, before signing the tax audit report, he sent a registered post to the previous auditor and obtained the post and acknowledgement. No, you have to take the NOC before accepting the audit, not before starting the audit or not before issuing the report. Right? So same case study is there in theory. Same case study they put over here in the MCQ. Okay, and provides management consultancy and other services to his client, 224 of the Chartered Accountants Act, and was also awarded Best Speaker of the Year as gratitude from the Institute. Best Speaker, solicitation, not to blow the trumpet. Okay, later on, CAN posted his framed photograph. What did we say? Passport style photograph, no framed photograph on his website, wherein he was receiving the said award from the Institute. Okay, so again, that will lead to 611, solicits client or professional work. Right, then upon hearing about the efficient services provided by MN and Associate Chartered Accountant, they were approached by XYZ Cooperative Society to act as their statutory auditor for the upcoming financial year. The firm agreed to the offer and had the following options in mind with respect to the fees to be charged for them. To charge fees as a percentage of net profit, to charge fees of 501. Right, so that is 1011. What is 1011? Charges or offers to charge, accepts or offers to accept in respect of his professional employment, any fees which are based on percentage of profit or which are contingent upon the result of his finding or of such employment, except as permitted under the regulations under the Act. And what is permitted under the regulations under the Act? Receiver, liquidator, auditor of a cooperative society. He can charge fees on percentage of net profit. And a valuer for direct taxes and duties, certain management consultancy services, certain fundraising services, debt recovery services, cost optimization service, any other service or audit. And in that any other service of audit, they've mentioned two, acting as IP, insolvency professional, and NANA, non-assurance services to non-audit clients. Okay, right. So to charge fees at 501, based on the above mentioned facts, you are required to answer the following MCQ. No problem. With respect to the fees to be charged for the new assignment of the cooperative society, which option can be opted by MN and Associates? To charge fee as percentage of net profit? Allow. To charge fees of 501? Yes. When there is no minimum fee clause which is recommended, minimum scale of fees that is recommended, it's not mandatory. So it says either one or two. Then, MN and Associates sought direct assistance from CAIA, internal auditor, as stated in the above scenario, advised as to whether he is permitted to do so in accordance with the relevant standards on auditing. IA cannot assist MN and Associates in assembling information necessary to resolve exception. MN and Associates can ask IA for direct assistance regarding evaluating estimates and assessing RMM. Pura ulta. And they say you cannot ask them for assembling information, but you can ask them for direct assistance for estimates and RMM. Reverse is true. They cannot ask direct assistance for the accounting estimates and the RMM, correct? And they can take assistance for assembling information. Sounds good. Right. MN and Associates cannot ask IA for direct assistance regarding accounting estimates and RMM in assembling the information necessary to resolve the exception in confirmation responses and in assembling information for the responses. So it says kuch nahi, no direct assistance at all. And last one, can ask for assistance for the estimates also, for the RMM also, and for the exceptions also. No. Here they say nothing. Here they say everything. And here again they give the reverse situation. Right? So which is the correct situation over here? Second one. Okay, for estimates and for RMM, no taking direct assistance. But for assembling information, yeah. For that you can take the direct assistance. Okay, as per the Chartered Accountants Act, under which clause CAN is liable for professional misconduct? 911, section 139. Right, 611, it is regarding solicits client or professional work. 812, and now it is regarding the fails to obtain sufficient information. 712, does not exercise due diligence or is grossly negligent in the conduct of his professional duty. And here what does it say? CAN, is he liable for the misconduct? And what CAN did? He posted framed photograph. Right, so framed photograph, what we say? Chalo, out under clause 6 part 1 of the first schedule. Right, clause 6 part 1 of the first schedule. Right, so this is 139, right, 139, 140. This is solicits client or professional work. 812, fails to obtain sufficient information. And then 712, does not exercise due diligence or is grossly negligent. Okay. Before signing tax audit report, M sent a registered post to previous auditor and obtained the post and acknowledgement. Will CAM be out guilty of professional misconduct under Chartered Accountant Act? Yes. Right. So as per clause 8 of part 1 of the first schedule to the Chartered Accountants Act, M will not be guilty of misconduct. Out. Right. As per 811, M will be guilty of professional misconduct since he accepted the audit without first communicating with the previous auditor in writing. Then 811, CAM will not be guilty of professional misconduct since the requirement for communicating with previous auditor being a CA in practice would apply to statutory audit only. Did they find us only? And to give us this information, we know if previous auditor is CA, NOC is mandatory, non-CA healthy practice to communicate. Clause 8 part 1 second schedule, kuch bhi. Clause 8 part 1 second schedule fails to obtain sufficient information. Out. Right. So 811. Right, that is 811. Okay, so do we have to study the full case study before reading the question while writing our exam? Yeah, so you can do a quick reading. What happens now, sometimes we are so excited in looking into the questions which are over there, and then we just overlook the case study, and then slowly we realize, okay, oh, where is that in the question, oh, where is that in the question, and then we thought it will save time if I don't read the case study and I directly start reading the question, but then going back and searching for it, it becomes confusing and it might take more time also. So don't do a PhD, just mota mati have a look at the content of the case study, and then after that you identify कि हाँ यहाँ 299 का reference है, here some confirmation request का point is there, right? Then after that there is some valuation of inventory, some point over there, common audit report in joint audit or something, right? Difference of opinion. So so now when you come to the case study and joint audit, difference of opinion, which part of the case study to go to. Right, so yeah, you don't study it like right now. I'm reading it word by word because we are just warming up, with our discussion for the integrated case study. So maybe not that much. Abhi wo chemical company, this company, that company listed on BSc, NSC, kya karne ka apne ko? But yeah, more or less you go through it and then you come to the question. Don't be overconfident by first looking at the question and then coming to case study. ठीक है, चलो case study 2 done. So now coming to case study 3. The problem with these case studies that unless and until I finish the entire syllabus, we can't do this discussion because they get ethics with a deadly combination of SA 610. Right, so that's so obviously after covering the syllabus only we can look into them. Okay, next one. ABC Limited is the public company listed on the National Stock Exchange having its registered office in Delhi. The company is primarily engaged in the manufacturing of pharmaceutical. During the preceding year, company recorded a turnover of 5,000 accompanied by a net profit of 805. Additionally, the company secured a loan facility from SBI amounting to 1,000. PQR and Company, a firm of CA based in Delhi, has been appointed as a joint auditor along with PK and Company and XYZ and Company, an esteemed CA firm in the same location, that is Delhi. ABC Limited has already completed the appointment related formality and they've also signed the engagement letter. The engagement letter contains the details on the objective and scope of audit, responsibilities of auditor and the management, and the identification of the AFRF. SA 210, principal content of engagement letter. Where is the expected form and content of the report? Because objectives of objective and scope of audit, responsibilities of auditor, responsibilities of management, identification of AFRF, expected form and content of the report. It's the 5th principal content of engagement letter. Okay. Moreover, while planning the audit, joint auditors have divided the responsibility for conducting the audit in accordance with 299. Further, the audit team has established 50 crore as the materiality threshold calculated at 1% of the turnover. Right. Now, during the audit, PK and Company come to know that one of the employee of the company has been involved in fraud amounting to 1 lakh. Right. So that is 1 crore and above. You need to report to central government. Additionally, as a part of audit procedure, the auditor has also sent confirmation requests to 100 suppliers to confirm the year-end balance. The said requests were designed in such a way that the supplier will directly respond to the auditor, indicating that the supplier agrees or disagrees with the same. Agrees or disagrees, positive confirmation request. However, in this regard, the confirmation responses were received only from 37 suppliers. Moreover, as a part of audit procedure, auditors of ABC also wants confirmation from the 37 debtors to confirm the year-end balance. However, in this process, the management refuses an auditor to allow the send the confirmation, and after asking the reason for refusal, auditor came to the conclusion that such reason for refusal is unreasonable and the auditor is unable to obtain relevant reliable audit evidence from alternative procedures also. So again, limitation on scope. Hatkadi. And the shackles in your hand. In addition, while forming an opinion, PQR and company had a different opinion on the valuation of inventory, but PK and company and XYZ and company had the same opinion. Right? So differences of opinion among the joint auditors. Right? And accordingly, given their majority stance, PK and company, XYZ and company assert that PQR and company must endorse a common audit report aligned with their opinion. Joint auditors having a different opinion may report separately, not bound by the views of the majority of joint auditors. Apart from this, XY Private Limited, an associated enterprise of ABC Limited, the company XY Private Limited appointed ZMR and Company, another firm of CA located in Rajasthan, as the statutory auditor of XY Private Limited for the first time for the current financial year. The financial statement of XY Private Limited was audited by a predecessor auditor in the previous year. During the audit for the current year, ZMR and Company came across a material misstatement in the opening balance, SA 510. Okay, that affects the current period financial statements. In this regard, the auditor discussed the facts with the management. However, the management does not accurately pay attention to the same and does not either adequately account for it during the year or disclose or present the same in the financial statement of the current year. The other important information of XY Private Limited is as follows. Paid up share capital, credit balance of P&L, turnover, borrowing from bank financial institution. On the basis of the above mentioned facts, you have to answer the following MCQ. In the given case, what should be the next course of action on the part of the auditors of ABC Limited when the auditor concludes that the reasons for management's refusal to allow the auditor to send a confirmation to the debtor is unreasonable and the auditor is unable to obtain the evidence from the alternative audit procedure? Auditor should have included the reasons for refusal and the inability to obtain evidence in key audit matter. No. Right? Auditor should include the reasons for refusal by management in written representation. No. Auditor shall communicate the matter with TCWG. Yes. And determine the implications for the audit report as per 705. Absolutely right. And auditor should have included the reason for refusal and the fact of the inability to obtain the evidence in the emphasis of matter. No. Right? So what they say, chalo, key audit matter, written representation, emphasis of matter. You say no, no, no. We communicate to TCWG and we modify opinion as per 705. Okay, whether PQR and company should adhere to the opinion formulated by PK and company and XYZ and company or explore alternative option, right? So they will have to go with the opinion formed by majority. Out. Has the option to incorporate a distinct audit opinion paragraph within the common audit report. So much creativity required, no, for creating 3 more options of MCQ. Okay, one is for the correct one, but the other 3 wrong ones is creativity. Okay, PQR can align with the opinion formed with by the majority. Any dissenting view should be prominently highlighted in emphasis of matter. No. And PQR and company has the discretion to issue a separate audit report independently. In such a scenario, the reference to the other auditor report issued by the majority of the auditor should be noted in the other matter paragraph. I know situations where students come to answer A, option A, B, C, they say no, not A, not B, not C, and then they read D, then they say, oh, D is also not there. So then they say, arey, fir A, B, C mein se one of them should be there. Okay, right. I hope all of you understood what I'm talking about. Okay, in the above given case, what should be the course of action on the part of ZMR and company when they found a material misstatement which has not been accurately accounted or presented or disclosed in the financial statements of the current year, right? So that is SA 510, right? So by the current year auditor, he has identified a misstatement in the prior period, right? So ZMR and company should not pay attention to the material misstatement found in the opening balance since they were not the auditors of the previous year. So don't pay attention. You don't pay attention to the point. ZMR and company should express a qualified or an adverse opinion as appropriate as per 705. Looks to be a good point. ZMR and company should take such a matter in written representation and no need to report such fact in the report. Out. ZMR should disclose such a fact and emphasis of matter. Out. What does it say? Express a qualified or adverse as appropriate. Right. So that is question number 3. Now coming to integrated case study. 4. ABC Limited is a manufacturing company having 3 manufacturing facilities in India and ranked within top 500 listed companies on stock exchange. Company marked turnover of 15,000, PBT of 2,000 during 33. Company has not accepted any deposits from public since incorporation of company. X is the promoter and chief executive officer of company. B, son of A, is company's non-executive director and holds a graduate degree from IIT Mumbai and a postgraduate degree from IIM Ahmedabad. During the audit, it was discovered that the company had acquired 2 subsidiaries, Man Limited, which deals in copper manufacturing, and Dhan Limited, which deals in paper manufacturing. Man and Dhan are audited by XYZ and Associates. ABC Limited prepared the consolidated financial statements for the current year under the Ind AS, which includes the financial statements of the Man Limited. However, the financial statements of Dhan were not consolidated as the company has not been able to determine the fair value of certain material assets and liabilities of Dhan as on the acquisition date. So there is a non-consolidation of subsidiary. This acquisition is accounted for as per investment in the books of ABC. Had the company consolidated the financial statements of both the subsidiary, there could have been a significant material impact on the important elements of the financial statements. Also, the financial statements of ABC for the current financial year, including the corresponding figure without consolidation of previous year. On the basis of the above mentioned facts, you are required to answer the MCQ. With respect to the non-consolidation of financial statements of Dhan with the financial statements of ABC, what should be the opinion of the auditor? How should the auditor deal with the matter? He should give a disclaimer of opinion. He should give an adverse opinion as its impact is material and pervasive. Emphasis of matter, other matter. So emphasis, other matter, to out. Disclaimer, when you don't get the evidence, you've got the evidence that there is a non-consolidation of a subsidiary and it is material and pervasive, so it would lead to adverse opinion. And with respect to corresponding figures, so now talking about SA 710, comparative information, corresponding figures and comparative financial statements. In the current year financial statements, what is the auditor's responsibility for the same? Auditor's opinion should refer to each period for which financial statements are presented. Auditor needs to refer to the current year financials only, be it comparative or corresponding. The auditor's opinion should not refer to the corresponding figures except if the previous period audit report is other than unqualified or the auditor has obtained evidence that a material misstatement exists of the prior period which was not addressed earlier, and the auditor has no reporting responsibility for any year other than the year for which he is appointed. So no reporting responsibility? No. He should make a report for each of the period? No, because they are not having comparative financial statements. They've got the corresponding figure, right? Need not report whether it is comparative or corresponding? No, right? So the correct option over there is the C, right? Correct option is the C. Okay, right? Then coming to integrated case study. 5. SCD and Associates, a firm of auditors, received an offer later dated 15th July to conduct the audit of BTM, a listed company engaged in manufacturing of cement for the first time in 32-33. The audit was accepted by the firm on the basis of offer letter, designating it as engagement letter. The partners of the firm have not felt the necessity to keep documents to show that the firm has complied with 141(3)(d) of the Companies Act. What is 141(3)(d)? Security liability or interest, indebtedness and guarantee. And disqualification of company auditor. CAE engagement partner of SED is conducting audit of the aforementioned company. Company was incurring losses since last few years and it has resulted in erosion in substantial part of the net worth. It had negative working capital and was substantially debt ridden. I can smell some going concern issue. Okay, you never know what is there in the case study, then the questions, but yeah. In the MCQ part. Company had only one plant located in Madhya Pradesh. The plant was found to be in working condition during the course of audit. Majority of the fixed assets of the company were located at this very plant. Engagement partner was informed during the audit that physical verification of PPE was carried out by the management. Internal auditor had pointed out in one of his report during the year that management did not physically verify the PPE. So management is telling that physical verification was conducted. But internal auditor found out that no physical verification done. Having experience as engagement partner in cement industry, he was of the view that valuation of PPE was less than the value recorded in the books of account. However, no such assessment work was made during the audit. During the year, the company defaulted in the repayment of loan to bank and credit facilities of the company were classified as NPA by the concerned bank, right? So clause 9 of Caro. One note forming notes to account in the financial statements on this matter presented for audit states as follows. Like the company has not provided for interest on the loan taken from the bank to the extent the same has remained unpaid as the loan accounts has been classified as NPA by the lender bank and the management is in the final stage of the settlement of liability. Interest, if any, will be recorded in the books of account when it will be crystallized after the settlement agreement with the lender bank. Okay, considering the prevailing situation, future plans provided by the management and applying the professional judgment, it has been decided to include a emphasis of matter paragraph in the audit report related to going concern. Right? You should put a MUGC, material uncertainty related to going concern. And the management, right? What does it say? It is felt that the matter is of importance, is such importance that it is fundamental to the user's understanding. And we say anything which is fundamental, emphasis of matter. Right? The management has also included this matter in the notes to account. However, it has not felt the need for evaluation of future plans provided by the management. During the audit for 33, management has requested via letter dated 20th May to provide all the information regarding contingent liabilities and credentials for login in income tax portal, GST portal and the other significant online portal. However, management failed to provide such information including the login credential despite the engagement partner request. So again, limitation on scope. Therefore, it was decided to sign the audit report on the basis of information available up to the date of signing of the report. Right? On the basis of the above scenario, answer the MCQs. Right. The case scenario describes the acceptance of the audit of the aforementioned company by SED and associate. Which of the following statement is likely to be most appropriate? It was proper for the auditor to accept the audit of the company on the basis of the offer letter called as engagement letter. There is no necessity to keep documents to show compliance with 141(3)(d) out as so long as there is no violation in respect of this requirement. It is improper for the auditor to accept audit of a company based on offer letter designated as engagement letter. It is necessary to accept audit on the basis of separate engagement letter. There is no necessity to keep documents showing compliance with 141(3)(d) so long as there is no violation out. Okay, it is improper for the auditor to accept the audit of a company on the basis of offer letter that is designated as engagement letter, and it is necessary for the auditor to accept the audit on the basis of separate engagement letter, and there is a necessity to keep documents showing the compliance with the requirement of section 141(3)(d). And it was proper for the auditor to accept the audit on the basis of the offer letter designated as engagement letter? No. Right? So it is improper for the auditor to accept the audit on the basis of the offer letter as engagement letter, then necessary to issue a separate engagement letter and necessity to keep the documents also. Right? So the correct option is C. Okay, what should be the appropriate course of action for the auditor in respect of PPE, considering the situation described in this respect in the case scenario? The auditor should not attach much importance to internal auditor observation out. How you tell me to ignore and not attach much importance to the internal auditor observation, as he found the plant of the company to in working condition with major assets intact. However, it should be evaluated whether impairment testing has been performed considering the company circumstances. Auditor should determine what modifications to audit procedures are necessary to resolve inconsistencies between internal audit report and evidence obtained by him and its effect on the other aspects of audit. No evaluation of impairment testing is necessary. Ouch. The auditor should determine what modifications to audit procedures are necessary to resolve inconsistencies between internal audit report and evidence obtained by him and the effect on the other aspects of audit. And further evaluation of impairment testing is also necessary, right? Considering the company's circumstances. Auditor should not attach much importance to internal auditor observation. We will not attach much importance to this option, right? So the correct option over there is C. Right. Company has not recognized interest on cost on borrowings as loan accounts have turned NPA during the year under consideration. Which of the following is most appropriate in this regard? Right. The policy followed by the company is in contravention of the applicable accounting standards to be followed. The policy followed by management is in accordance with the established norms due to the classification of loan account as NPA by the current bank, concerned bank. So obviously bank will not recognize the income on NPA, but the borrower, does it have to recognize the interest as an expense? Yes. As banks do not recognize interest income on NPA, mirror treatment is applicable to company in question. Kaise re? How they make point? Okay, bank is not recognizing income, I don't recognize expense. Arey, bank has no trust on you. That is why prudence basis they are not recognizing income on NPA. They'll recognize it on cash basis. The policy followed by management is in accordance with the established norms as negotiations are underway with the banker. Interest would be recognized on NPA borrowing upon crystallization of final settlement with banker. Ouch. Policy followed by management is in contravention of the guidelines issued by RBI. Ye kahan se aa gaya? Right, so policy followed by the management is in contravention of the applicable accounting standard. The fundamental accounting assumption of accrual is being violated over here. Okay, right. Auditor has decided to include EOM in the audit report related to going concern. Which of the following statement is true? EOM can be included in the audit report depending upon the professional judgment and the evaluation of management plan without maintaining any documentation. EOM can be included and no separate evaluation of management plan is required if adequate disclosure about the material uncertainty is made in the financial statements. The auditor will give an unmodified opinion with an MUGC paragraph. And if adequate disclosure is made, the auditor will give a modified opinion along with a MUGC paragraph. Ouch. Right, so unmodified with MUGC. Hello, unmodified with MUGC paragraph. Right, what did we study? Going concern and the audit report. SA 570, damn important discussion over there. Okay, going concern assumption, appropriate, going concern assumption inappropriate. If it is inappropriate, straight away adverse opinion, not true and fair. Going concern assumption is appropriate, but the material uncertainty exists, and then adequate disclosures are made in the financial statements. Then we say unmodified with MUGC, material uncertainty related to going concern. No adequate disclosures in financial statements, then auditor qualified or adverse opinion. And management is unwilling to do the assessment of the going concern. Consider the implications on the audit report. It might lead to qualified or disclaimer, or auditor may decide to withdraw. Right, so here they are saying adequate disclosures are made in the financial statement. So unmodified with the MUGC, the material uncertainty related to going concern para. And considering the matter of not providing information regarding contingent liability, including the login credentials by the company as described, which of the following statement is most uchit, appropriate? Auditor should give clean report. Auditor should request management again to provide such information and must determine whether it is possible by crook. If not by hook, then by crook. Alternative audit procedures to obtain evidence. And in case of failure to obtain evidence, implication for audit report should be considered. Auditor should take written representation. Nahi re? stating that all liabilities have been reflected and unmodified opinion should be expressed. Auditor's responsibility is fulfilled on commenting appropriately regarding non-furnishing of required information by management regarding disputed statutory due under clause 37B of the Caro? No. Why all of a sudden they've got disputed statutory dues over there? No. So the correct option is B. Okay, right. So that is integrated case study 5. Now coming to 6. Subhadra is conducting the statutory audit of a branch of FNB Bank. The branch is having deposits of 450 crore, advances of 300 crore reflected in financial statements. While performing the audit procedure, while reviewing the advances of the branch, she came across the following particulars of 2 cash credit account. Right, what does it say? KT FAB, PM Decor, sanction limit, value of primary security, collateral security, net worth of the borrower, net worth of the guarantor. Okay, right. Information pertaining to KT FAB, the first one, and a 32, 33, and then in December, January, February, March. Drawing power, outstanding balance. Right. The outstanding balance in the account has remained more than 950 crore, 9.5 crore, beginning from 31st December 32 till the 31st March 33 on all days. It has always exceeded the 9.5. Right. Information pertaining to PM Decor. Right, so again December, Jan, Feb, March, and then drawing power and the outstanding balance. Both units are working and their financial position is satisfactory. Branch has classified both account as a standard asset. In the question bank, we have a question of CA Prachi. Okay, on reviewing the statement of accounts classified as NPA on 31st March 23, she finds that an education loan was granted to son of Mr. X, a customer of the bank, for pursuing short duration technical higher studies abroad for 50 lakhs, sometimes back repayable in 5 years. The loan was granted against security of residential house of X valuing 60 lakh assessed by the company's empaneled valuer. The name of the bank's empaneled valuer has now been removed due to certain irregularities. Later, value of residential property house got reassessed by another valuer and have gave a report reflecting the realizable value only 20 lakh. Meanwhile, the installment in the education loan account are overdue for 110 days as on 31st March. The account is classified as standard asset till the last year, that is 31st March 32. While verifying the deposits of the branch, she noticed that inoperative accounts for less than 10 years are to the tune of 5 crore reflected in the balance sheet of the company. Inoperative, where there are no transactions in the account for more than 2 years. She plans to focus her audit procedures on this segment too. One of her team members has suggested the following audit procedure in this regard. Verify whether there exists a system of informing customers on the account turning inoperative. Identification of cases where there is significant reduction in the balance as compared to last year, testing debits in inoperative account and verifying the auto activation of the inoperative account. While gathering information to be included in LFAR, she came across some cases of advance accounts which become non-performing within a relatively short period of time. The details of few such identified accounts are given as under: ABC Industry, XYZ, SK and DK Creation, sanction limit, nature of facility, date of first sanction and date of renewal. The branch also sends substantial number of the inland outward bills for collection. The bank has a system under which account of customer on whose behalf bill has been sent for collection is credited only after the bill is actually collected from the drawee, either by the bank itself or through its agent. One of our team member has jotted the following audit procedure for inland outward bill sent for collection. Verification of outward bill for collection as on closing date, accrual of commission income in respect of bills outstanding as on closing date, verification of accrual of charges in account of customer on whose behalf bill was sent for recovery where bill has returned unpaid. On the basis of the above mentioned facts, you are required to answer the following MCQ. Keeping in view the information stated in respect of the first two borrower, the CAFAB and the first one, right, in the case scenario, which of the following statement is correct? The classification made by the branch is not proper. Both accounts should be classified as NPA. The classification made by branch is not proper. Borrower account of KT FAB should be classified as standard, whereas PM Decor should be classified as NPA. Classification made by the branch is not proper. Borrower account of KT CAP should be classified as NPA and borrower account of PM Decor should be classified as standard, and the classification made by the branch is proper. Right, so it is not proper based on the recovery in the account, right? So what we see in case of the KT Fab and the PM Decor, right? So what does it say? The value of the primary security, collateral security, and this is the sanction limit, right? And then this is the information furnished regarding the KT Fab and the information furnished regarding the PT Decor. So here it has always exceeded the sanction limit, whether here it is almost within the sanction limit over there, right? So what does it say? KT Fab, it has always exceeded the sanction limit, right? So what does it say? KT Fab should be classified as non-performing and PM Decor should be classified as the standard asset. Considering the issue relating to the education loan in the case scenario, how it should be classified? Substandard, doubtful, SMA, special mention account, or the loss asset. Here it says doubtful account. Why? Because there is an erosion in the value of the security, right? So, and what was the value of security? 60, and now it has come down to 20, right? So there is more than 50% erosion in the value of security, straight away to be classified as the doubtful asset, right? Straight away to be classified as the doubtful asset. Then, as discussed in para 3 of the case scenario, one of the team member has suggested certain audit procedures for the inoperative accounts. Which of the audit procedure or combination of procedures are relevant? Right? Identification of cases where there is a significant reduction in balances as compared to previous year, testing debits in inoperative account, and auto activation of inoperative account. Whether there exists a system of informing customers on account turning inoperative, identification of cases where there is a reduction in balance, and the verifying the auto activation of the inoperative accounts. Then verify whether there is a system of informing customers of their account turning inoperative and testing debits in inoperative account and the auto activation of the inoperative accounts, right? Whether there exists a system of informing customers on the account turning inoperative, identification of cases where there is a significant reduction in balance as compared to the last year, and testing the debits in the inoperative account, right? So what does it say? First one, they don't have the concept of, informing the customers that the account has turned inoperative. But you see the other three, they are talking about where the account turns to be inoperative, right? Then second, it talks about where there is a reduction in the value when a balance as compared to the previous year, right? So reduction in the balance as compared to the previous year. And then third point is the testing the debits in the inoperative accounts, right? Testing debits in the inoperative account, and again testing debits in the inoperative account. And then what is the other point over there? Verifying auto activation of inoperative accounts. So auto activation is not the right thing. What does it say? The accounts need to be revived only with the proper authority. So here they are doing the auto activation of the inoperative account. So it says auto activation is not right. Okay, somebody comes and deposits the money and then automatically the account becomes operative. It says not right. Right, so that should not be the audit procedure. Rather, they should see that the accounts have been revived only with the proper authority. Right, so that is why we select the option number D. And okay, auto operation of the activation of inoperative account, not right. Okay, right. Then quick mortality cases, when an account becomes an NPA within 1 year of its sanction, it's called as a quick or a early mortality case, are required to be stated in LFAR by statutory branch auditor with reference to the particulars. Which of the following statement is correct? Right, so now they talk about the quick or the early mortality account over there, right? So quick or the early mortality account, right? So sanction limit, nature of facility, date of first sanction, and the date of the renewal, right? So ABC, XYZ, SK and Son, and the DK creation, right? So what does it say? 0.75, 1st October 2022 was the date of the first sanction, and within 1 year of the sanction, if the account becomes a NPA, then it is called as a quick or an early mortality account. All the four cases reflect our quick mortality, are indicative of shortcomings in credit appraisal. Only the case of DK is in the nature of quick mortality, are indicative again. Is ABC, XYZ, DK are in the nature of the quick mortality cases, right? So ABC, XY and the DK. And what is the last option over there? XYZ private and the DK are in the nature of quick mortality. Quick mortality is again indicative of shortcomings in the credit disbursement. Okay, right? So what does it say? ABC, XY and the DK, right? ABC, XY and the DK, right? So if we see it over here, ABC, XY and the DK, right? So these three accounts, it says, are the indication of the quick mortality account over there, right? Because here the renewal has been done. right, within 1 year. But for other 3, it says renewal not applicable and the date of the first sanction, right? So looks like the indication is it is not yet done. So these would be the quick mortality cases. Okay, right. And then one of our team members has planned certain audit procedures for the inland outward bills for collection. Which of the following audit procedure is more likely to be relevant in such a situation? To verify bills for collection on the closing date, right? To verify bill for collection on closing date and the verification of the accrual of commission in respect of bills which are outstanding. To verify accrual for the accrual of charges in account of the customer on whose behalf the bill was sent for recovery and whether bill has returned unpaid. And to verify accrual of commission in respect of bills outstanding as on the closing date and verification of the accrual of charges in the account of customer on whose account the bill was sent and it has returned unpaid, right? So commission charges only after the bill has been collected, they have to be recognized, right? So this accrual of charges in respect of customer whose bill has been sent for recovery and it has returned unpaid. Right? So that particular accrual of the charges is required to be done. Commission we'll recognize once the bill money is received. Okay, once the bill is collected. Okay, and so that's almost an entire case study which can actually go into the bank audit chapter also. Right, next one. Paras is in the midst of conducting the statutory audit of Meto Chemical, a listed company. He is collecting information required for Caro from management. Audit procedures as are necessary in these circumstances will be performed on the information so obtained. Company's revenue from sale of product is 15,000. During the course of his exercise, he obtained the following information. Management has provided the following details of dues which have not been deposited on account of certain dispute. Right, so income tax, EPF, municipal corporation, nature of the due, forum where the dispute is pending, period to which it relates to, amount involved, amount unpaid, and the other comments. The company has already made a provision of 10 crore in its financial statements considering the likely outcome of the ongoing matters under dispute at ITAT. However, no provision has been made in respect of income tax matters before the CIT, PF contribution, and the property tax matter pending before the High Court. The following information is available from the financial statements records of the company: property, plant, equipment, right of use assets, and the intangible asset. Values stated above are as per the gross block. Right of use assets consists of lease where the company has obtained the right of use under the lease agreement in accordance with the NDS. Meto Chemical Limited produces goods for which central government has specified maintenance of cost records. Besides, cost audit has also been mandated under 148(2). The cost auditor has already examined the cost records and issued the cost audit report. During the course of audit, Paras has found that physical verification of inventory of the company has been conducted during the year by the management. The following is a summary of the inventory as per the physical verification conducted by the management vis-a-vis its books of account as at the end of the year. Right, so raw material, work in progress, finished goods, stores as per physical verification as per the books of account. During the course of audit, he is informed by the manager that 2 supervisory employees have been dismissed for service due to fraud of 25 lakh committed by them during the year. The amount has also been subsequently recovered from them during the year itself, and then answer the MCQs. Right, so full Caro case study over there. Right, select the correct statement relating to the reporting of statutory dues which have not been deposited on account of dispute under clause 7B of the Caro. Right, only matters relating to income tax, PF contribution pending before Honorable High Court needs to be reported. Only the income tax matters pending before the ITAT needs to be reported. All the 4 matters for which information has been provided in the fact pattern needs to be reported, and income tax, PF contribution, property tax matter needs to be reported, whereas ITAT does not require reporting. What does it say? All the 4 matters: disputed statutory dues, where dues have not been deposited on account of dispute, whether provided for, whether contingent liability, they need to be reported under clause 7B of the Caro. Okay. The correct statement relating to reporting duties of the auditor under clause 1, property, plant, equipment, and tangible asset is as follows. It is the duty of the auditor to report whether company is maintaining proper records showing full particular, including quantitative details and situation of PPE. Similarly, there is a duty of the auditor to report whether company is maintaining proper records showing full particulars of intangible asset. This duty does not extend to reporting on maintenance of records for right of use assets, and further, auditor has to report whether PPE have been physically verified by management at reasonable interval, and this duty to report report on physical verification does not include right of use assets. Obviously, it also includes the right of use assets. So here they are excluding the right does not extend. They say it does not extend. It is the duty of the auditor to check whether company is maintaining proper records. This right is also included for the right of use assets and the intangible assets. And then physical verification, and it also extends to the right of use assets. It is the duty of the auditor to report whether company is maintaining proper records. This duty does not extend to the reporting on the right of use assets or intangible assets. Out. And it is the duty of the auditor to report whether company is maintaining proper records showing full particular. This duty also applies to the reporting on maintenance of the right of use assets and intangible asset. However, PPE physically verified, but the duty for physical verification does not extend to right of use asset. Out. Right? So what is the correct option over there? B. Okay, proper record showing full particular, and it also is also whether physical verification has been conducted at the reasonable interval, and it also extends to the right of use assets. Okay, as regards cost records is concerned, which of the following statement is correct regarding the reporting under clause 6 of the Caro? Auditor is required to report whether prescribed cost accounts and cost records have they been so made and maintained. The auditor is not required to report on maintenance of cost records since cost auditor has already issued the report. So what? Statutory auditor, you still need to do the reporting under clause 6 of Caro. Auditor is required to examine the cost audit report as well as take into any qualification. No, we don't have to comment about cost audit. We only have to comment about the cost records. And the auditor has a duty to report on cost records. The clause does not require the auditor to comment on maintenance of the cost records, right? So duty to report on cost accounts and not on cost records. No, we have a duty to report on the cost accounts and cost records. Have they been made and maintained? Right? Have they been made and maintained? And considering the value of inventories arrived upon the physical verification conducted by management vis-a-vis the value reflected in the books of accounts, select the correct option for the instance in the case study to be reported by the auditor of this, by the auditor on inventory. Right? So whether inventories have been physically verified by the management at reasonable interval and discrepancies of 10% or more for each class of inventory. Right, so now for each class of inventory, we need to check whether there is a discrepancy of 10% or more, and only in those cases we need to do the reporting. For fixed assets, it says material discrepancy. For inventory, it says discrepancies of 10% or more. Right, so difference in classes of inventory should be reported irrespective of the materiality. No, there is no instance to be reported in the given case since difference between total value is less than 10%. No, it is for each class of the inventory. To report difference in the value of work in progress, finished goods, spare parts, since the difference in each class of inventory is the 10% or more based on value after adjustment, auditor should also comment whether it has been properly dealt with in the books of account. And to report differences in the value of finished goods, stores and spares, since the difference in each value is more than 10%. No, it is 10% or more. Right, and also whether it has been properly dealt with in the books of account. And should the fraud described in para E need to be reported under clause 9A of the Caro? Right, so actually Caro reporting is what you say, the fraud reporting comes under clause 11A of the Caro. And 11A of the Caro, whether any fraud on or by the company noticed or reported during the year. If yes, the nature and amount involved is to be indicated. There is no need to report since the amount involved is less than 1 crore. That is for reporting to central government. That does not apply in Caro. It is a fraud on the company and the auditor should report the nature of the fraud and the amount involved. The duty to report the fraud under this clause is irrespective of the amount involved. The requirement for to report the fraud does not apply in the current situation since the fraud was not discovered by the auditor, and the requirement to report the fraud does not apply since the amount was fully recovered during the year. Kuch bhi. What does it say? Nature and amount involved. And any fraud on or by the company noticed or reported during the year. If yes, the nature and amount involved is to be reported. Okay, wonderful, right? So that completes our discussion for the case study 7. Now coming to 8. Ayush, the proprietor of BCD and Company Chartered Accountants, was appointed to audit the financial statements of Amrita Industry Private Limited for 33. These financial statements were prepared in accordance with Dutch GAAP, and foreign component, preparing as per the local GAAP, so GAAP conversion, and the terms and conditions specified in the contract between Amrita Industries Limited and Dutch Industries BV, right? As one of the terms and conditions of the contract was to get the financial statements audited from an independent auditor. The contract also stipulated auditors to take into account the misstatements of £5,000 or above, yes, while framing their report, right? So materiality described for the component. Any misstatements identified below this threshold does not require correction or adjustment in terms of stipulations in the contract. While planning the audit team had also determined performance materiality as 10,000 and overall as 2 lakh. Okay. The following information extracted from the general purpose financial statements of Amrita Industries prepared in accordance with the provisions of Companies Act is given below. Right. So turnover, borrowings from bank, paid up capital. That's this current year and the previous year. Right. The borrowings from bank consisted of the working capital credit facility only. The company had been enjoying such credit facility with a sanctioned amount of 75 crore. The credit facilities were enhanced to 100 crore at the beginning of the year. Outstanding balance in the above credit facilities have never crossed the sanction limit at any time during each of the year. Shubham, partner at BB and Associates, a chartered accountant firm, was appointed as engagement partner for audit of general purpose financial statements of Amrita. Before finalizing audit plan, BB and Associates asked for internal audit report. Management informed there was no internal audit team or function. Section 138. Do they need to have the internal auditors? Yes, we say for private company, borrowings of 100 crore or more in the preceding financial year or turnover of 200 crore or more. Right, so your turnover is more 200 crore or more, so they need to appoint an internal auditor. You have to check for the preceding financial year. Okay. During the course of the audit of the general purpose financial statements, Anand, an audit executive, performed risk assessment procedure TOC substantive. He performed a trend analysis to compare the purchase of raw material in various months. He also performed purchase production sales cycle analysis to understand inventory holding. Besides going through the company's internal control manual and visiting the company plants, inquiries were also made with company information system personnel to provide information about the control failures. Diligent inquiries were also made from company marketing personnel regarding the contractual agreement, right, with the customers arrangement. Inquiries were also made from company in-house legal counsel. Communication were also made from the external legal counsel by sending a letter of inquiry. Right, so litigation and claim audit procedure. While issuing the audit report, BCD and company inserted an other matter paragraph in the audit report specifying the use of the special purpose financial reporting framework for preparing presentation. On the other hand, BB and Associates decided to issue an adverse opinion on the financial statement except for cash flow statement and an unmodified opinion on cash flow. Right? As per BB and Associates, the cash flow statement was prepared as per the required method and hence it did reflect the appropriate figure. On the basis of the above mentioned facts, you are required to answer the following MCQ. The audit team of BCD were not sure which materiality to choose to evaluate the effect of the identified misstatements on the audit and of the uncorrected misstatements, if any, on the financial statements in order to form an opinion and to conclude whether reasonable assurance that they are free from material misstatement, whether due to fraud or error. You are required to guide the audit team by selecting the appropriate option. In the case of special purpose, so SA 800, right, management may agree with the intended users on a threshold which below which misstatements identified will not be considered to be material. The existence of such a threshold does not relieve the auditor from determining materiality as per SA 320. This is exactly what we study in SA 800. Okay, sometimes the threshold of materiality could be given in the special purpose framework. Do you follow the threshold, the amount of materiality given in the special purpose framework? Yes. But does that relieve you from the responsibility to determine materiality as per SA 320? No. You still need to determine materiality as per SA 320. Okay. In the case of special purpose financial statements, management may agree with the intended users on a threshold below which misstatements identified during the audit will not be corrected. The existence of such a threshold is sufficient to comply with the requirement of materiality as per 320. No. Existence of such a threshold is sufficient to comply? No, it is not sufficient to comply. In the case of special purpose, misstatements based on consideration of financial information, needs of the intended users are considered material and pervasive. However, auditor needs to follow the threshold limit provided in the terms of contract, and threshold should be considered as performance materiality. Kuch bhi. Okay, auditor is required to comply with each requirement of an essay unless the essay is not relevant or the requirement is conditional. In the case of special purpose, requirement of 320 is not applicable. Again, kuch bhi. Just anything they are writing. Right? So what is the correct option over here? First one. Okay, even though if the threshold of materiality has been given under the special purpose framework, still will the auditor determine materiality as per SA 320? Yes. Okay, right, next question. Manish, the audit manager of BCD, objected to the insertion of other matter paragraph in the report. According to him, there is no requirement for an other matter paragraph to disclose the use of special purpose framework where the contention of Manish is in order. Right? The auditor's report on special purpose shall include an other matter paragraph alerting to the users that the financial statements are prepared as per a special purpose framework, and as a result, they may not be suitable for another purpose. To avoid misunderstanding, the auditor shall mention that financial statements are prepared in accordance with special purpose and therefore they may not be suitable. Adding another matter paragraph for this will result in duplication of matter, so the same should be avoided. We'll avoid this point. Okay. Auditor may consider it appropriate to indicate that the audit report is intended only for a specific set of users and may not be suitable for other purpose by adding a key audit matter. Auditor's report on special purpose financial statements will include an emphasis of matter paragraph alerting to the users that the audit report for the financial statements, financial statements are prepared in accordance with the SPF, and as a result they may not be suitable for another purpose. Correct. It should come under the emphasis of matter, not coming under key audit matter, other matter, or it should be avoided out. Okay, right. 3. Chitranga, the audit manager of BB Associate Chartered Accountant, is seeking your guidance in drafting separate opinion on cash flow and other financial statement. So now we are talking about, SA 805, single financial statement, specific element, account or item. Guide the audit manager by selecting the appropriate option. Right. When the auditor considers it necessary to give an adverse or disclaimer on the financial statements as a whole, auditor will not include an unmodified opinion on a single financial statement. Why? Because it will contradict your adverse opinion on the entire financial statements. Okay, on one side, you're saying okay, entire financial statements not true and fair. And here you're saying cash flow is clean. So are you not contradicting your adverse opinion on the entire financial statements which you've given? Right, so it says if the auditor's opinion on the audited financial statements, we studied those very important 5 points in SA 805. Right, so if the auditor's opinion on the audited as entire financial statements is adverse or disclaimer, single financial statement unmodified opinion cannot be issued. Okay, the expression of a disclaimer of opinion regarding the results of operation and cash flow where relevant, and an unmodified opinion regarding financial position is allowed. Okay, for profit and loss, cash flow unmodified, but for balance sheet, for profit and loss and cash flow you give disclaimer, but for balance sheet you give clean. And in this case, the auditor has expressed a disclaimer of opinion on the financial statements as a whole and separate opinion on cash flow. No. The expression of an unmodified opinion prepared under a given framework and within the same report, the expression of an adverse opinion on the same financial statement under the same financial reporting is permissible. No. And an adverse opinion or a disclaimer of opinion relating to a specific matter described within the basis for opinion section does not limit the auditor's responsibility to issue an unmodified opinion on identified matters that would not require a modification to the opinion. What is the theory of the SA 805? Okay, auditor, if for the entire financial statements, complete financial statements, you've given an adverse or disclaimer, single financial statement, unmodified opinion, sochna bhi mat. And a single financial statement, unmodified opinion, no. Okay. Company has violated the provisions of Companies Act by not appointing internal auditor. Yeah, turnover 250 crore. Which of the following statement is likely to be correct? Reason necessitating the appointment of internal auditor, and for the matters relating to appointment of internal auditor. Company was required to appoint internal auditor during 32-33. Right, so 33, as it has fulfilled the necessary condition relating to turnover in 31-32, such an internal auditor may be an individual or a partnership firm only. So first part is correct, but it has to be individual partnership firm only? No. Company was required to appoint an internal auditor as it fulfilled all the conditions regarding turnover, borrowing, paid up capital. Such an internal auditor may be an individual partnership or a body corporate. So your second part is correct, but first part not right. Paid up capital, so we don't check only for private company. Private company, borrowings or turnover. And it is Amrita Industries Private Limited. Company was required to appoint an internal auditor for 2030-33 as it fulfilled the necessary condition relating to turnover. Such an internal uncle may be individual, firm or a body corporate. Yes, he may or may not be an employee also. Okay, and company was required to appoint an internal auditor as it fulfilled the conditions for turnover borrowing. No. And it can be individual partnership. No. For what you say internal auditor, it may be a body corporate also. Right. Anand, an audit executive, has performed various procedures during the course of audit. Which of the following combination of procedure is not likely to be considered as a part of risk assessment procedure? Performing trend analysis, analytical procedure, yes. Inquiry from the company marketing personnel, in-house legal counsel, yes. Communication with the legal counsel by sending a letter of inquiry. So confirmations you don't send at risk assessment stage. Inquiry made with company's information system personnel to provide information about the control failures and going through company's internal control manual, observation and inquiry, yes. But confirmation from the legal counsel not to be done at risk assessment stage. Risk assessment, what we say, inquiries of management, analytical procedures, observation and inspection, and a few related activities. So no confirmations at the risk assessment stage. Okay, right. So there we have completed our discussion of the discussions up to the what you say, the 8 integrated case studies over there. Right, we've completed 8. Right, so now say let us just we'll come back again over here. We've completed up to 8. Now say let's go to the other what you say, MCQs which are there in the book. And so one we have started from the beginning of the chapter and from the beginning of the book, and on the other hand we will also do some simple ones which are there towards the which are there chapter wise. Right, so in that particular process, okay, okay. Okay, right. So in your MCQ book, in the same book, yes, this book, now I've come to the last chapter over there, the chapter number 19. Right, so we'll also, on the other hand, we'll keep on doing the integrated case studies for the standards and all of that. But on the other hand, we'll also complete for these special chapters. Right, so we'll look into the MCQs for this particular chapter number 19, which is regarding the ethics and the liabilities of the auditor. Okay, right. So let's begin with our MCQ discussion for the chapter number 19, which is the professional ethics and the liabilities of the auditor. Right, so what happens in the chapter of ethics? We discuss a few sections of the Chartered Accountants Act, like section 2.2, right, then section 27, which is regarding the maintenance of branch offices, then the disciplinary mechanism, council guidelines, and then very important, and also NOCLAR, and then we come very important to the discussion on the 34 clauses of the ethics. Right, the first schedule, second schedule, part 1, part part 2, part 3, part 4, and second schedule part 1, 2 and 3. And then we have the professional misconduct, right? And then part 4, first schedule, other misconduct, and again professional misconduct and the other misconduct. And then we have the 12, 2, 3, 2 and 10, 4, 1, right? So that's the breakup of the 34 clauses of the ethics. Like, you know, clause 1, part 1, first schedule, 12 clauses, practice by non-CA. Sharing is sharing, accepting, partnership, then canvassing, securing, soliciting, advertising, NOC, 139, percentage, contingent basis, permission and signing, right? That is part 1, first schedule. Then not to share, not to accept CA in service, right? Then part 3, first schedule, FFF, not being a fellow, acts as a fellow, does not supply, does not ply the information called for by ICAI and or its functionaries. So we say fail to provide information to ICAI and gives false information under clause 6 and 7 of the part 1 of the first schedule. And then we have the 2 clauses under the part 4 of the first schedule. Whether a CA, whether in practice or not, will be deemed to be guilty of other misconduct, imprisonment up to 6 months, and in the opinion of the council brings disrepute to the profession or to the institute as a result of his action, whether or not related to his professional work, right? Then we have the part 1 of the second schedule, breach of confidentiality, CA in practice, certifies without examining the records, vouches for the accuracy of the forecast, expresses opinion where substantial interest is involved, fails to disclose a material fact, fails to report a material misstatement, does not exercise due diligence or is grossly negligent in the conduct of his duties, fails to obtain sufficient information, fails to invite attention to any material departure from the generally accepted audit procedures, and fails to keep monies belonging to his client in a separate banking account. And then we have the part 2 of the second schedule, 122, contravenes PRG, provisions of the act, regulations made thereunder, guidelines issued by the council. 222, breach of confidentiality, CA in service. 322, false particulars in information form return statement to the ICAI. And 422, defalcates, embezzles money received in professional capacity. And then 132, it says imprisonment for more than 6 months. Right, so that's just an outline of the 34 clauses of the ethics over there. Okay, so D is the practicing chartered accountant from Mangaluru. He has been practicing as a sole proprietor for past 2 decades. Wow. Mr. D's daughter, Miss S, is a newly qualified chartered accountant who cleared the CA final exam just 3 months ago. Naya CA. And immediately after qualified, she also wanted to set up sole proprietorship concern and practice on her own. Oh my God. And not practicing with father, practicing on own. After setting up the firm, she printed her own visiting card as follows. Right? SS and SN Company, Chartered Accountants, Proprietor, Miss S, FCA. Oh, are you? FCA. What did we say? Once your name is entered into the register of member, you become an ACA. And then ACA in continuous practice for 5 years, or his experience is less than 5 years, but experience is considered to be equivalent to that of being in practice for 5 years. Then you become a FCA. And here she became a CA just 3 months ago. Okay, JJ Nagar, Mangalore, and then the number in view of the above visiting card. Whether S will be guilty of professional misconduct, if so, under which clause? Not being a fellow, acts as a fellow member of the ICAI. Right, so what does it say? No, S won't be guilty. As per the recent decision, a CA in practice can give any details in the visiting card except for vision of the firm. So vision value is not allowed to be given in visiting card. S will be guilty of misconduct under 711. Advertises professional attainment. Bichari ne kuch attainment, she's not done any advertisement. Is guilty of misconduct under part 3 second schedule. Part 3 second schedule, 1 clause, imprisonment for more than 6 months. No. And S is guilty of professional misconduct under 131. Yes. Not being a fellow, acts as a fellow member of the institute. Okay, you understand fellow? Okay. Question number 2. R, friend of Mr. P, a CA in practice, was invited by Mr. P to set up a network firm along with 2 more friends. Along with this, all the 4 auditors agreed to the same and decided to start a network firm by the name RP and Company. Array network hai, to after the name it should be affiliates or network. Okay. However, one of the auditors suggested that they cannot use the term and company and it needs to be changed. But are informed that there is no such regulation regarding firm name. They don't do audit class. Now, that's the problem. Which among the names should be suitable to the newly started network form in accordance with the provision of the CA Act? RP and Company, RP and Associates, RP Private Limited, RP and Affiliate. Okay. KB Associates is a CA firm, has been appointed as an auditor of a company for 2021. It consists of two uncles, K and B. K is a brother of the father of the finance director of the company. B is an old friend of the finance director of the company. So friendship, familiarity threat. Which kind of ethical threat is associated with the appointment of the KB Associates as an auditor? And so FSSAI, 5 types of threats: familiarity threat, self-interest threat, self-review threat, advocacy threat, and the intimidation threat. So here it is the familiarity threat. Dharma has established another branch in the same city. Branch was inaugurated on 3rd October and 4th October. Friends of CA Dhamma gave an article on the front page of the local newspaper congratulating Dhamma on opening of the another branch, which also includes half-page photograph, half-cut of CA Dharma with his consent. In your opinion, was the news in the newspaper a conduct on the part of CA Dharma, and what actions can be taken against him? Yes, he is out. It is a misconduct under 812. 812 fails to obtain sufficient information. No. 511 secures canvases and a jack buttering. So not 511. And then it says it is a misconduct under 711 and he can be reprimanded. That is warning last time not to do this again. His name can be removed from the register of member up to a period of 3 months or impose a fine of up to rupees 1 lakh. It is the misconduct under 812. Why they are behind 812? Periodical magazine fails to obtain a sufficient information. So no, it is 711. Okay. Be one of the partner of the firm of facing a dilemma as to whether the firm BMY LLP should accept the appointment as statutory auditor of firm limited, wherein B had communicated in writing addressed to the outgoing auditor, Mr. Dalai, under certificate of posting. Out. RPAD. We say by hand against the written acknowledgement, RPAD, or an acknowledgement on the email which is registered or the last known official email address, or the UDIN should be generated for the same. And the outgoing auditor has not sent the acknowledgement via the official and the outgoing auditor. Right? So he sent the letter to the outgoing auditor under certificate of posting, and the outgoing auditor has sent an acknowledgement via the office email. But this email address of the outgoing auditor is not on the registered one, is not registered with the institute, but it's the last known official email address, though it is the email address which is not registered with the institute. What do we say? Acknowledgement on the email which is registered with the institute or the last known official email address. Right. So with the institute, B is of the opinion that this is not positive evidence of delivery and violates the provision of Code of Ethics if the firm accepts the audit assignment. With respect to the dilemma being faced by Mr. B, partner of the firm, regarding acknowledgement of the communication from retiring auditor via the office email is not positive evidence of delivery. Dilemma of B is correct. It is not positive evidence of delivery. Out. By dilemma of B is not correct, as it is the positive evidence of delivery, as the same is received from the official email of the outgoing auditor as per the Code of Ethics. It is not correct, as statutory auditors are not required to communicate with the retiring or outgoing auditor in this case. Is dilemma of B is correct, as the email address of the outgoing auditor from which the acknowledgement was come is not registered with the institute. No. It is email address registered with the institute or the last known official email address. Okay. And so whenever I've been telling you, that you need to do micro study. So this micro study is for these types of the MCQs. Okay, Swami and Company is the firm of CA. The firm has 8 partners. The firm has a good portfolio of client for the statutory audit, but the same client has some other firms for their tax audit. In the current year, many existing clients of Swami and Company LLP happens to be the statutory auditor have requested the firm to carry out tax audit as well. The firm is expecting the number of tax audits to increase significantly this year. One of the partners of the firm has also raised a point that the firm can accept the tax audits up to a particular limit. However, other partners are of the strong view that limit on audit is only applicable for the statutory audit and not for the tax audit. This needs to be decided as soon as possible so that the appointment formalities can be completed. How many partners? 8. How many tax audits per partner? 60. So 6 8s are 480. 480. There is no limit on the number of tax audit. They can collectively sign 360 tax audit report. They can collectively sign the 480 tax audit report, and they can collectively sign 360. However, one partner can maximum sign 660 tax audit report. No. Right? All the partners of the firm can collectively sign the 480 tax audit report. Again, a similar question. Nakul Sardev and Company, a firm of CA, has 12 partners, right? So 12 into 6, 720, right? So again, straight away we can go for the 720 tax audit reports, right? So just different numbers over there. There it was 8 partners, here it is the 12 partners. Okay. D, a CA in practice availed a loan against his personal investments from a bank. He issued 2 checks towards the repayment of the said loan as per the installments due. Both the checks were returned by the bank with the remark insufficient funds as per the Chartered Accountants Act, under which clause CAD is liable for misconduct. They've not said professional because it is other misconduct. CA check got bounced due to insufficient funds. You're bringing disrepute to the profession. Right? In the opinion of the council, brings disrepute to the profession or to the institute as a result of his action, whether or not related to his professional work. Okay. CA intelligent, a CA in practice, part-time tutorship under the coaching organization of institute. He got the award Best Faculty of the Year as gratitude from institute. CA intelligent posted his framed photograph. Gaya. Framed photograph, gone. What did we say? Passport style photograph. So guilty of misconduct under 611. And a 611 solicits client or professional work directly or indirectly. Okay, hopeful. An aspiring student of ICAI approached Whitty, a practicing CA, for the purpose of articleship. Whitty, the principal, offered him stipend at the rate of 2,000 per month to be paid every 6 months. So stipend not paid on a monthly basis. That means you're contravening the provisions of the Act, the regulations or the guidelines issued by the council. So guilty of professional misconduct under 122. And contravenes any of the provisions of the Act, regulations made thereunder or the guidelines issued by the council. Ram is practicing in the field of FMP for 12 years. He's gained expertise and domain over others. Ratan, a student of CA course, is very much impressed with the knowledge of Ram. He approached Ram to take guidance on some topics of financial management subject related to his course. Ram, on request, decided to spare some time and started providing private tutorship, general permission given under 1111 to Ratan along with some other aspirants for 3 days in a week for 12 hours. However, he forgot to take the permission. No permission required. Okay, but there is a limit on how many hours of teaching can be done by a practicing CA. It says the direct teaching hours should not exceed the 25 hours a week. Right? It should not exceed the 25 hours a week. Letterhead of Panaj, a practicing CA, is reproduced below. Panaj, Pankaj, ACS, and then LLB, FCA, Chartered Accountant, Member of Parliament. Ayo. Can he become a Member of Parliament? Yes. But can he write it on his professional document that he is a Member of Parliament? No. So as per 711, he will not use the designation of Member of Parliament in addition to that of CA. What is 711? Advertises his professional attainments or services or uses designation or expression other than that of CA on the professional documents such as letterhead, signboard, visiting card, unless it be a degree of university established by law in India, recognized by central government, title indicating membership of ICAI, or an institution whose membership has been recognized by central government or the council, and provided that a member in practice may advertise through a write-up subject to the guidelines issued by the council. Hopeful, an aspiring student. Again, so this question we've already studied regarding the stipend, right? So that is 122, right? So actually this is a question which has got repeated over there. Okay, right. So now coming to the integrated case study over there. K is the practicing CA and also a member of CPA Ireland. He handles only GST related work and tax audits for his client. Currently, he is having 19 companies for which he is handling the tax audit. At the beginning of the current year, he was approached by 40 new clients for tax audit. So 19 plus 40, right? So within the limit of 60. He was reluctant to accept all the work as he feared breaching the permissible limit of handling client. After consulting several friends of his, he finally decided to accept the work of just 2 big clients who approached him. K's friend, a CA in practice and a member empaneled as IP, was acting as statutory auditor for a listed entity. The audit for the current year was completed, but there was some difference of opinion between auditor and management. As a result of this, company did not send the notice for the AGM to Mr. J. When J inquired, it was said that the company is not obliged to send the notice to the auditor, and it is the responsibility of the auditor to be aware. Oh, there is section 146, auditor's right to receive notice and attend general meeting. Okay, having heard this, Jay went to his friend to clarify the above matter. As a result of this incident, the management has not paid a part of the agreed audit fee to Jay. In retaliation, Jay took lien over the few documents pertaining to the company. Wow, look at the way they are fighting. Having come to know about this, K immediately informed his friend that this would lead to professional misconduct. K and friend J decided to start a partnership firm. They completed all formalities and went ahead and printed their visiting card. KG and Associates, K Chartered Accountant, CPA Ireland, and here he is saying insolvency professional. The firm has also received the following audit assignments: concurrent audit of T Bank, statutory audit of BBT Bank. It is to be noted that the bank was not sponsored by T Bank. Offered to act as settler of ZZ Charitable Trust, internal audit of a PF trust of a government company, and statutory audit of a government company, Government Company Limited. On the basis of the above mentioned facts, you are required to choose the most appropriate answer for the following MCQ. In the given scenario, K has breached the maximum limit of the clients. If yes, can he be guilty of the professional misconduct, right? So what does it say? The limit is 20, the limit is 20, maximum ceiling is 25, or the maximum ceiling is 60 in number. The assignment existing plus new handled by K is well below the prescribed limit, and hence there is no breach. Okay. Assuming yourself to be Mr. K, what would be your advice to J on the said matter? The company has not followed the provisions of section 146, auditor to receive notice and attend general meeting. All notices and other communications relating to general meeting shall be forwarded to the company auditor. And so as per section 147, punishment for contravention, company will be punishable with a fine which shall not be less than 25,000 but which may extend up to 5 lakh. Right, company has not followed the provision, right, of the section 146, and all the provisions shall be forwarded to the auditor, and also as per section 147, right? So these points have got repeated over there. The company has not followed the provisions of section 147 or EO, that is 146, and the argument of the management is right. Companies Act does not mandate kuch bhi. Right, so what is the correct option over here? Company has not followed the provisions of section 146. Will the retaliating act of Mr. J against the company make him guilty of professional misconduct? Yes. As per the recent decision of the Ethical Standard Board, we have the 33 decisions given at the end of the chapter of ethics. A CA cannot exercise lien over client document record for non-payment of fees. And audit lien, all that is dinosaur concept. And that is not practically relevant today. Theoretically, we say, yeah, client, if you don't pay fee, then we can exercise audit lien for non-payment of fee. Practically, rather, the Ethical Standard Board of ICA has clarified that CA, you cannot exercise lien even for the non-payment of the fees. Okay, in the given scenario, visiting cards printed by K and J, is there anything which may lead to professional misconduct? If so, for what provision? Mentioning CPA Ireland, the term insolvency professional, K and J respectively violate the provisions of 711. There is no information contained in both the visiting card which will lead to professional misconduct, as it is a membership of an institute which has been recognized by Central Government Council, CPA Ireland, and where we say foreign accountancy bodies, where ICAI has a MOU, Memorandum of Understanding on a Mutual Recognition Agreement, or insolvency professional is the title given by the central government. And what do we say? Recognized by central government, then that is allowed. So there is no information contained in the visiting card which will lead to misconduct. Right, now what does it say? Ireland has violated, but it says as the other fellow mentioning it that he is an insolvency professional, there is no misconduct, and mentioning insolvency professional is the misconduct, whereas Ireland is allowed, it says no, both of them is okay, right? So that is why there is no information contained in both the card which leads to the professional misconduct. Okay, right. The firm has received the following assignment: concurrent audit of T Bank, right? Then the statutory audit of the BBT Bank. It is to be noted that bank was not sponsored by the T Bank above. Then offer to act as a settler of ZZ Charitable Trust, internal audit of the PF Trust of a government company, and the statutory audit of a government company. Right, so 1, 2, 3, they've said it's not a sponsored bank. So 1, 2, 3, we can accept. But now internal audit of a PF trust of a government company limited, wherein you are already the statutory auditor of that government company. So if you are the statutory auditor, should you do the internal audit of the PF trust of that government company? No. So 1, 2, 3, and either 4 or 5. Again, this is given in the recent decisions of the Ethical Standard Board. Okay, right. So that is the first integrated case study. Now coming to the next one. YS and Associates, a firm of CA having CA, and SN partners, are based in Mumbai. YS Associates got their website developed. YS and Associates from KPY Limited. The color of their website was very bright and attractive, and to run on a push. What do we say? Website has to be run on the I'm not able to hear you, on the pull mode, exactly, and not on the push mode. Name of the partners and the major clients were also displayed on the website without any disclosure obligation from regulator. What do we say? Name of clients and fees charged can be given if it is required by any regulator in or outside India, and to the extent of the requirement of the regulator. ठीक है. Y accepted the appointment as tax auditor and commenced the tax audit within 2 days of appointment. Since the client was in a hurry to file the return of income, after commencing the audit, he realized the mistake of accepting the audit without communicating with the previous auditor. This we saw in the integrated case study earlier also. Before signing the tax audit report, he sent a registered post to the previous auditor. No, not before signing the report. It has to be before accepting the audit. Then S also provides management consultancy during the year, looking to the growing needs of his client to invest in the stock market. He also advised them on portfolio management. No. Can CA install AC in his office? Yes. Acting as advisor, consultant to an issue, allowed. But can CA go to the pub? No. Broking, underwriting, portfolio management services, not allowed. Right, whereby he managed the portfolio. Looking at his expertise in financial management, Tarak, a student of the CA course, is very much impressed with the knowledge, and he started doing the private tutorship. However, no permission was taken. What do we say? For private tutorship, no need to take the permission. YS and Associates is appointed to conduct the statutory audit of XYZ. XYZ is required to appoint internal auditor as per the statutory provision, and appointed CAIA as the internal auditor. And the associates asked internal auditor to provide direct assistance. What we've already seen, SA 610, regarding accounting estimate, no. Regarding assessing RMM, no. But assembling information to resolve exception, yes. SA 610. Right. So YS and Associates sought direct assistance from IA, the internal auditor. So they cannot ask for direct assistance for accounting estimates, for assessing RMM, but for assembling information, they can ask for the direct assistance. So that is one question from 610. Then, private tutorship. What does it say? CAS is not guilty of misconduct as he is teaching within the prescribed hours, that is not exceeding 25 hours a month. Is not guilty as he is teaching within the prescribed hours not exceeding 25 hours a month as per regulation 192A, as per regulation 190A. Is guilty since he has not obtained the permission from the institute. CAS is not guilty as he is teaching within the prescribed hours, that is not exceeding 25 hours a week as per regulation 190A. Okay. Before signing the tax audit report, Y sent a registered post to the previous auditor and obtained the acknowledgement. Will he still be guilty? Yes. Right. So 811, he will not be guilty of misconduct. 811, he will not be guilty. Yes, because it's applicable only to statutory audit. 811, he will be guilty because he accepted the tax audit without communicating with the previous auditor. Yes. And then it says 812. So now 812, it comes under the first schedule, not under the second schedule. Whether website designed by or for YS Associates and Company is in compliance with the guidelines given under clause 611? Yes, 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 no. Right, so what does it say? Yes, website can give name of partners and major client. No. As the website can be designed on push technology. No. There's no restriction on the colors used. Yes. But is that, what does it say? Is it in compliance with the guidelines issued? No. Is it in compliance with the guideline? No, it is not in compliance, as the names of the partners of the firm and the major clients were displayed without any disclosure obligation from any regulator. And also it should not have been run on the push technology, but it should run on the pull technology. Okay, IM and Company CA is the newly started firm. Their first assignment was to conduct audit of CD Cracker, a cracker manufacturing company. Since it was their first audit, the partners immediately accepted the work without paying attention to relevant procedure. They started their audit work from 25th May, yes, for the financial year. During the course of audit, the auditors requested for the financial statements of the preceding year along with the details of transaction till 25th May of the current year. Management argued that both the details are out of the scope and hence they cannot provide the detail. However, after repeated requests from the auditors, they finally provided it in September 21. It was suspected that the senior accountant could have indulged in the fraud amounting to 117 lakh. However, on further investigation by management, it was found that there was a gross mistake on the part of accountant who has wrongly credited certain accounts which amounts to 18 lakh. The company provided the proper and correct evidence for the balance sheet. Hence, the auditors were strongly convinced that fraud has not taken place. Due to the absence of an audit committee, the auditor suggested to the director to replace the existing accountant as he was poor in basic accounting skills. Initially, the company thought of handing over the tax audit work to the previous auditor. However, since they had a bad experience last year in the form of argument regarding the contents to be included in tax audit report, especially in regard to the disclosure of key ratios, it was decided that IM and company shall also act as tax auditor. After the conclusion of audit, one of the partner of the firm, was confused as to whether the firm could be guilty of professional misconduct for a plausible violation of any of the provision. He contacted Mr. M, his partner, to get clarified from the doubt. Messrs. Hire P Limited, a recruitment agency, contacted Mr. I regarding a vacancy in one of the leading manufacturing company. I resigned as a partner of IM and company and joined the company. The agency raised an invoice for the services rendered by him, which amount to 0.252% of the CTC offered. I agreed to pay the amount. However, since his friend was a manager at the agency, he received full discount on the invoice. Yeah. Angered by the act of resignation, Mr. M filed a complaint with the institute that I had violated the provisions of the act and is guilty. Having come to know that M was one of who had filed the complaint against him, I decided to take revenge. Oh my God, it looks like a movie scene. Decided to take a revenge. While thinking of a suitable reason for filing a complaint, he recalled the fact that A was engaged as a registration authority for obtaining digital signature. Again, this is given in the recent decisions of the Ethical Standard Board. Can a CA in practice also act as a registration authority for the digital signature? Yes. Quoting the same, he filed a complaint against M, stating that he was guilty for misconduct for violating the provisions of the Act. Right, so based on the above, answer the following questions. Right, what can you infer from the situation given in point 1? Management was right. Both the details asked by the auditor were out of the scope of audit. The auditors have asked to ask only the details of the previous year and not the details till 15th May. Oh, we check previous year also, we check subsequent events also. So we can ask for both the detail, previous year also and subsequent events also, before the start of the year and after the end of the year also. Both the auditors and the management have the right to ask both the detail and the right to not provide both the detail. Who is this great person preparing the option? It's very creative work. Both the auditor and the management have the right to ask. Both of them also have the right not to provide what is asked for. Auditor have the right to ask both the detail. Management contention that it is out of the scope of the audit is wrong. And previous year also and subsequent events also. Both auditor has the right to ask the details for. IM and company guilty of professional misconduct for violating any of the provisions of the Act? If yes, which clause? Right, so now what does it say? They accepted the audit without communicating with the right. After repeated requests, the audit was accepted and then handed over the audit, and since they had bad experience, they appointed the other firm. Right, so now what does it say? Should they have asked the previous auditor before accepting a tax audit? Yes. Right, so that is 811. What did we say? Where previous auditor is CA, NOC is mandatory. Non-CA, healthy practice to communicate, right? So NOC. Is I guilty of misconduct under which clause? Again, it says 122. That is contravenes any of the provisions of the act, the regulations made thereunder, or the guidelines, right, issued by the council, right? So here it says 0.25% of the CTC offered, right? So here it is 121. You know what is 121? Sorry, not 122. It is 121 over there, which is regarding CA in practice. What does it say? He pays or allows or agrees to pay or allow any share in the emoluments of the employment undertaken by him, right? And here it is a share in the emoluments of the employment undertaken by him, okay, 0.2% of the CTC, right? So that comes under the 121. And is M guilty of misconduct, and if so, under which clause, right? So again it says no, M is not guilty of professional misconduct, because what did I say? As per the recent decision of the Ethical Standard Board, can a CA act as a registration authority for obtaining the digital signature? Yes, he can act as a registration authority for obtaining the digital signature, right? He can act as a registration authority for the purpose of obtaining the digital signature. Okay, right? So this is 121, which is regarding the pays or allows or agrees to pay or allow for CA in service any share in the emoluments of the employment undertaken by him. And so that's a brief one, like an 8 pages over there, only for the discussion of the chapter of the ethics. And so, and already in the integrated case studies also, at many places we are studying is seeing a reference of the ethics coming over there also, right? So then if I come to the chapter above that, that is the chapter number 18, which is regarding the ESG and the SDG, right? So very important in ESG, SDG, one, we have to know the 17 sustainable development goals. Then we have to know the 6 C's of the integrated reporting, the 6 capitals over there. And then we have to know the 9 principles of the BRSR, right? We have to know the 9 principles of the BRSR. Okay, right? So what are the few questions over here regarding the ESG and the SDG given over here? So first here it begins with a case study and also some particular theory question over there, right? And then this theory question we've actually covered even in the theory part of our discussion in the class. Okay, company A, B both are top 1000 listed companies, so all the 9 principles of the NGRBC are applicable. What are the national guidelines for the responsible business conduct? What are the 9 principles over there? 1, ETA. You remember the Creta car running on gas? Right? So ethics, transparency and accountability. Then safe and sustainable goods and services. Then this is, you need to take care of your employees, you need to take care of your stakeholders, and you also need to respect and protect the human rights. Then after thinking about your employees, your stakeholders, human rights, then you're also going to think about the environment. Then you're also going to think about how you can influence the public and the regulatory policy. And that means you're thinking of the inclusive growth and the equitable development. And last point, we say value to the consumer, who is the final person in the value chain, who is the end person. And so those are the 9 principles of the BRSR. And so one question which we have over there is regarding the theory, right? So mainly we have the MCQs, but this one particular we've put in it regarding the theory part of the discussion, because it's an integrated case scenario over there. And then after that we have the integrated case scenario wherein we have the MCQs, right? So wherein we have the discussion regarding the MCQs, and then after the integrated case study we also have the discussion regarding the general MCQs over there, right? Certain general MCQs over there, right? So what we will do now, take a break, and then after the break we'll complete with our discussion on the chapter number 18, and then do a few other chapters from the special chapters, and then again move on to the integrated case studies and the concept-wise case studies. Right, so hope that these 2 hours have also been quite right, full capacity for you for the discussion regarding the MCQs, right? So let's meet after the break. Okay.